It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the companies that have had best improvement in the last week, what we call the 30/30 list. Gary's been through both lists and pulled out his favourite charts, along with the best opportunities, the best ones to study, and the ones that we're looking at now. Good morning, Gary. How are you?
I'm great, Chris.
How did you find this week's list? The market's roaring ahead, so no doubt that's changed it. What have you sensed from the list and what's happening?
I noticed on the list there, some of the weeklies were actually mostly pretty small. So like the first sort of nine, I think first nine on the weekly list were the small stocks there. So pretty hard to sort of set up, or pretty hard to sort of trade a lot of those because they were just sort of just pinged. So it wasn't really, BCPs or 0123s or high type flags or consolidations. They were just really a bit of a sharp bounce off the bottom there, which is sort of good indication that some of the small caps are starting to liven up here, which probably tells you a little bit about where we are in the market as well. Obviously, the big caps have been running for a while now. Seeing definitely a bit of activity in the mid space there, but now we're starting to see some of the small caps starting to ping as well. So it probably just tells you where we're at in the market sort of cycle there. So once we start to see those, a lot of those small caps humming and pinging and everyone getting buoyed by small caps, that's probably the point to be a little cautious there. So not quite there yet, but some early signs there that we're approaching, maybe a few weeks away from that. But just another, something to be mindful of there.
Right. So when you're looking at the quarterly list, the momentum leaders being the ones that have most likely been running for longer than a week, how's that list looking? You finding any opportunities or interesting charts to dissect in that list?
Yeah, probably a bit more interesting actually. So sort of number one on the list is Titomic there. So it's funny actually. I remember actually going into Pack Partners presentation years ago, going in and actually listening to the Titomic story. I think it had been trading for about a month or two, and I walked out of there pumped. Thought, that's a great story. I went back to my desk, bought some shares. I think it went up 15-20%, and I flicked them out. And then I looked back a couple of weeks later, and the shares kept going. Bugger. But I never went back to them. But I did watch the share price quite a bit. So, but it's after that initial glory there, what it could have done there, never really had much roll out for the stock there. It's sort of full of promise and wasn't too much delivered. And that, I guess that sort of 3D sort of printing there, and I think around that metal sort of space as well. So I think they're around sort of alloy metal stuff there. So just difficult sort of penetration there, I guess, to get through there. But the share price is really well back here. But I just noticed it's been going down for a couple of years now. But just noticed it definitely had a bit of life, I guess a bit of exhaustion into that low. Definitely had some volume into this rally here. So it is sort of telling me just to keep an eye on this one here, because it's sort of promised a lot for a long time. He hasn't delivered, but we've had a bit of a bounce here, a bit of a change of character there recently. Some pretty good volume there. And just even looking at the last 3 or 4 days down here, one thing I sort of noticed there was that there wasn't, there wasn't a lot of selling in those on those down days. So like the 3 down, like the day of the low and the 2 days prior to that, very, very light trading here. So not seeing a lot of selling going on after this. What's a pretty big pop for this stock is, I know it's probably underwater historically there, so probably a lot of overhead supply. So you probably, when you get that much overhead supply, you think you're going to get a bit more selling here, but there hasn't been a lot selling there. So that's actually kind of positive there. So that tells me to put this one on the list there and just keep an eye on it there, because we definitely do have a change character taking place there. Number 3 on the list was MKR. Similar story too, Chris, as well. So it had a bit small here, but has had a bit of a pop here. Pretty healthy volume all the way up to the high. And again, 1, 2, 3, 4 days down, even 5 days. There's no selling that. no one's selling into this rally here, even though the stock's more than doubled. So again, you got a bit of a pop here. Think you'd see a bit more selling into this, but yeah, pretty light as well. So definitely circled those two as just sort of nice sort of stocks that have popped pretty hard, and just having a bit of a pause at the moment there, but not a lot of selling coming in there. So that's constructive there. Sort of WA1, which was a bit of an old one that was on the list for quite a while, Chris. Sort of one of those stocks. I think we might have even covered this one in that.
Oh, it definitely did. It was in the top momentum list for months on end and held pole position for weeks and weeks.
Yeah, so I gave us sort of two, couple of VCPs in there, few B wave breaks, and pretty hot there. So I thought I'd just sort of look at this one here. Just we sort of saw this come off here. I think after this, this looked like a bit of a fifth wave sort of style after you've had that big impulsive drive, big corrective pattern, and then a final fling here. So this looked like it was probably going to come off here, but I did notice there still wasn't a ton of selling. Some modest selling in there, probably larger than we've seen before, but not super aggressive selling there. Did see a bit of hard selling off that shoulder there. So that's probably a bit of a negative picture there. So that wouldn't have been looking too good there. So in terms of getting back in, it would have been hard to get back into this trade here. But, as a safety point here, like this is my favorite point here, even if you are looking at these sort of stocks again, you probably want to see that B wave break here. I think you'll see, they often just keep making lower highs, lower highs, lower highs. It can last a lot longer than you think. So you really want to see that B wave break here. So even if you waited here, applied some discipline and waited for that B wave break here, that's sort of not till, that wouldn't have had you in till $10 there, because it's still pretty light in through here. But, if you had bought in at $10 here, this has gone to 13 here. So that's 20-30% move already, just by being disciplined as well here. So that's what we've got to be as a trader as well. We can't just sort of jump in it. Got to have a process there, got to have a minimum sort of standard there. Or I think it's just sort of wise to sort of have some principles in your trading there and sort of stick to them. I had a great comment this morning there. I think it was like a philosopher, might have been Heraclitus is the guy there, but basically you can't step into the same river twice. And I thought it's a really, really, really good sort of comment there. Great phrase there, because obviously, obviously the rivers changes, and then obviously we change. So things are never going to be the same there, and it's the same for the market as well. So the market will never be the same. So it might be the same setup, might look like the same, but it really never is the same there. So really, the only thing that we can, with the market changing, river changing, with us changing as well, the only thing that we can't change is the process. So we have to sort of follow the same process there. So that's the only thing that we can really control that should stay the same. And that's what we would do under those circumstances. So we don't sort of pull a trigger until we see, the minimum setup occur. Once we're in the setup there, this is our process. This is where our target or our stop is. Scaling up. What do we need to do to scale up? Where do we run our stops? Do we, sell into heat? Where do we get out? Where do we take profits? All the rest of it. So that should be standardized as a trader there. So I think, it's a really, really great, really great. It's a really great phrase actually. That wasn't used in anything to do with trading there, but I just thought, wow, that's sort of trading 101 really, because you can't step into the same river twice is exactly what the market is as well. We can't step into the same market twice as well. It's never going to be exactly the same. Things will change there. And, if you read that sort of trading zone there, the only thing we can control is the process that we use ourselves. So that's why, we're looking at these sort of setups there. We've got to have minimums there to enter there. ST1 was sort of one that I saw as a nice little VCP, Chris. A little bit thin, bit small, but did sort of congest back, tighten up, a little bit of a, a little bit of a triangle there as well. and then we had that little break on good volume there. So we had the little, had that 1 day up there on good volume there, which is probably a nice lead there. Probably, depending on how you look at your little B waves there, probably to me that's like a little bit of a B wave break on the way down here, a little ABC in here. You might have got interested there. Little small, but not a bad sort of setup there. Next one there was number 7, IMB. Pretty interesting chart here because there's sort of, even though it's a bit thin, has been building quite nicely. It's really been corrective on the way down. So impulsive up, gapping up, moving up freely, and then when it's pulled back, it's really been all sideways. So this is sort of a bit sideways here. This is really sideways. We're seeing that pulsive move and then trade sideways and then start to break up. Again, pretty nice move in here. And then we saw this little tight little flag up here. And then we're broken out again. And you think this thing we're seeing here is actually seeing good volume out of that break. And it's just remained pretty buoyant as well. So this is still looking pretty solid here. So intelligent monitoring, which is around sort of internet security and video sort of surveillance and stuff there. So interesting growth area. Looks like change in management there, sort of has restructured the company, got it going in the right direction there. So definitely one to keep an eye on there. So not showing too much weakness there. And some good solid signs there for that stock as well. SXG was probably one that was seen before, selling cross. But look, again, just probably got this VCP in here, got a second VCP in here as well. Just keeps building here and showing strength there. So pretty solid. Probably getting a little vertical now, but we can see these, VCPs, they can pop and then come back again, but has hugged with 50 here so far. So pretty constructive. I think VHT, I think we want to cover that little VCP and then the takeover there. IMU, I actually think it's pretty interesting here. That's had a big pop, big volume there. I think I sort of mentioned here, this did have a bit of selling here. So when you see them pull back, you probably don't want to see them have this heavy selling, but has had another little pop here, pulled back again, a bit more selling again, had another rally here. So the whole thing sort of used up a bit of time. So it'd be interesting to see another little congestion back here, Chris, maybe like a third little, VCP sort of tightening up here. So you want to see, just because there has been a bit of selling in here, taking a bit longer, but you want to see a little tightness in there. So that is definitely one to keep an eye on there. So does look pretty good. BPH, I thought was this was a no for me actually. So I look at this sort of chart. So seen here, it's obviously run up there, had that bit of exhaustion into the high there. But what we did see was we saw the 1, then we saw 2 days of selling, and then probably saw a 3rd day of selling as well. So I thought, okay, even though I had some good volume come back in again, selling sort of continued. So this is reasonably aggressive selling here all the way through. Because if you look at those 1, 2, 3, 4, 5 bars selling here, you look at that in context to previously the volumes all the way through there. That's very heavy compared to the prior period. Back there, we just didn't see any big volume bars. So that's not what you want to see here. So we're seeing a bit of a bounce again. So you might be like, oh, this looks quite good here, but look at the volumes, pretty light here compared to this movement here. So there's a difference there. Sometimes when you see these things pull back, you just want to see the volume there. They're often asked me, people sort of quiz me on the volume quite a bit. And the main thing is sort of, you got to put the volume in context to the previous moves. So people say, what's good volume, what's bad volume? So really you're looking at it in context to how it's traded previously. So if you look at, some stocks trade on volume constantly. So where other stocks are pretty lightly traded as well. So that's why you sort of got to put it in context to what's going on here. So you can see here in context, this is quite heavy, sustained selling throughout the period, considering how light volumes were through here. And so that's why I've got that as a no there. So rather than just cover the trades that I like here. I think sometimes it's worth looking at the ones I don't like and why they're just to make a point of that as well. Adore Beauty, ABY. Big question for you here, Chris, actually. This sort of was pretty interesting. It had like looked probably a bit V-shaped here, but there was a bit of a cup and handle in there. Could you argue this is a little cup and handle here, or is this is probably a tighter cup in here and a little handle as well?
Cup and handle in a cup and handle is possible. It definitely is, and the best one I can ever remember is Magellan at $1.80. So MFG doing a cup and handle on the weekly, and then on the daily had a cup and handle inside the weekly handle, and it just led to an explosive move, and Magellan just went on for almost a decade of running. So that was a cup and handle inside a cup and handle. But it's nice that whether it's one or two, they both had a rally into the cup and handle. So from the June lows up towards the August highs, leading into the larger V-shaped cup. That does bode well and does statistically improve the chances of a positive breakout of either handles.
Yeah. I sort of noticed that sometimes, like in the past there, before I sort of learned the cup and handles, I used to look at the old highs and lows there. So if I saw it go to a new high and pull back, that'd always worry me. That'd be like a false break as I look for those. But the strongest stocks do those all the time. So they will make false breaks. They'll do little throwbacks and then continue on in. I guess the thing is here, which was probably more impressive here, was that the pullback did sit on top of the current high. So in terms of sort of holding its strength there, it really sort of pulled back here. We saw here no selling. This is what, in context there, there's 3 or 4 days down here. We didn't see any selling in there. And all we've done is come back and set on top of the high there. So we sort of saw that come back and set on top of the high, and then start over a few days up here. That's pretty constructive there. And then breaking to a new high here, that's pretty positive. So there's your little cup and handle. You've got sitting on top of the previous high as well. Got a little bit of volume starting to come in here. That gives it probably some, confidence that, we're going to push on through there. So I think NGH might have been another one there that I saw recently.
Change charts on that one. Looking at that from the start of September through to where we are today, if you just take a 10,000 foot view and have a quick glance at the volume, there's not one large volume bar there. Every single standout massive volume day has been an update.
Yeah.
So just thinking about what you were talking about in the last chart, does that sort of bode well for it to show that the only standout days with massive volume are all significantly large gains for the day?
Yeah, and you'll have to see like this, impulsive move and then sideways corrected. That's what you want to see, impulsive move, sort of corrective. Even this here, impulsive and then even though it didn't go on with it, that's, the back goes sideways for a long time. That really tells, that's why sometimes these things can take a long time to build, but you see the right characteristics. You got to keep watching there, because at some point they will break here and move here. And then, this is, you might have been watching this for months and months and months, but then eventually it'll crack out and then move on there. So it's probably more important to see the right type of behaviors in the stock, see that impulsive move and corrective sideways, impulsive move, sort of corrective sideways. So, yeah, and as I say, the volume's pretty nice as well there. So, what you don't want to see is sort of it heading down here and having these heavier volume bars like this. I guess that's probably not so negative. That's probably not a pretty picture, which we can see here it rallied again, but then it's gone back to a new low again. So when you do see those heavier sell bars like that, you might think that's exhaustive there, but it might be sometimes. But those heavy, consistent selling there usually means that that can weigh on a stock for a while. So and that's the opposite to what you want to see on the upside. When you see the market, you want to see big bars, 1, 2, 3 days going up there, big volumes and stuff there. So I think MGH was another one there that was here. This is one that I sort of saw there. See, bit of a cup there, bit of a tight handle in here, little three-way there, and then it started to break up here. A few little throwbacks in here. See how it's nice, That's the thing about these cup and handles I've noticed, is that they do have a few throwbacks as you sort of People look at this going, your eyes going to fail here, and then see, look at that bar there, like that. You saw that sort of have a bit of a throwback there, but there's no volume in it, so it's pretty thin. So when you start to see throwbacks like that occurring, that should give you confidence that there's no selling taking place here, and then obviously which kicked on from there. So
Like a wide anomaly, wide range, low volume.
yeah, so I think TUA, we showed that one last week, so look at that just continues to motor home. That what hurts me. So yeah, so that's just beauty. That's a beautiful cup of handle as well. So got to sort of start training and start looking for those couple of handles there, because so many of the stronger stocks there. If you thought probably William O'Neill's work there, yeah, that's just some of the stronger stocks there. What we up to the ABY, so CU6, yeah, pretty strong here. I think we covered this last week there, Chris. It was a little starting to sort of tighten up here, a little flag here, but I think we were indicating here, still not seeing any selling going on in there. And sure enough, what's happened here, we're sort of kicked on here. So look, getting a bit late here, but still not seeing any weakness there. So, yeah, when you're long these stocks there, yeah, you got to have the capacity to sort of stay in there. It's until you sort of see something that you don't like. That's the key there, is to identify the negative signs or the warning signs. So if you don't see any warning signs, and yet all you're seeing is positive signs there, then you've got to stay with it.
And just buy right and sit tight.
Yeah. But we should be looking for signs of distribution as well. Some heavier selling there, and look, we don't want to be jumping at shadows, but we definitely want to be looking at some stuff there. So just look at that move there. What's that one there I'm showing here? CU6. So yeah, so great example here. See how tight it is see how it's hugged the 10, quite nicely as well. I think actually it's funny, the next stock I'm going to show you, so that's CU6, that's hugged the 10 day. Look at this.
Wow.
That's MYX, that's number 28. So look at that. When I initially sort of broke above the 50, did break the 10 here, but then it sort of stayed strong here. And look at that. That's just from over there. It stayed above the 10 the whole time here. So they're your stronger stocks. That's what Kalamagi sort of describes as stronger stocks. They're the stocks that are, so he's looking for this. Every time this comes back here, the 10-day moving average, he's looking to try and buy in here. So look for a little pause on the, whether it's a little half hourly or something there, or come in here. Even this little congestion here back to the 10, he'd probably be trying to have a little bit of nibble at this. That might have had you concerned, that little bar there. First time sort of selling there. But he obviously did tighten up the next day. Even in here, there's probably a little, you can see here within that's a little cup and handle, just probably, if I drilled in a half valley there, there's a little cup and handle that's set up there. So there's our little cup there, little handle there. And then we're sort of pushed on there through that as well. So just nice and tight in there.
Even the VCP too.
Yeah. So it's funny they sort of stay strong here. So that's our quarterly. So that's actually pretty interesting list there. So good lessons in there as well. I think out of the weekly there, VUL I thought was interesting there, which was sort of number 11. This to me is a bit of a watch and wait here. So we still really haven't seen, this has been a pretty strong downtrend. Still have a broken swing high here, but we do have some volume lines in here. So it was still a little heavy down here. But this is just a watch and wait here for me. So just want to possible change of character, but still have it broken above there. I thought was sort of interesting. Bit of a jumpy sort of stock here, but has had a pretty strong run, had a pullback there, just starting to build here. This could be a first high low here. So okay, volumes coming in here. A little bit choppy, but definitely one to keep an eye on there. Tabcorp, which is probably one that, not one, I guess it's had a nice little jump here and a really tight consolidation, Chris. There's that tight little flag there. So normally when they sort of tighten up like this, they normally have another run there, so that's sort of short term, for what's a pretty safe-ish sort of stock, probably kind of more of a Telstra sort of sedate stock there. That's pretty good little price action there. So, but probably just one for a short-term opportunity rather than a long-term there. Thought FCL looks pretty interesting, just because there's a couple of big lines in there. Trying to work out what the sort of stock was in there. I think the CDI's released more shares, but you shouldn't sort of see that market orientated there, but there's some decent lines there. I think it actually did make a little false break there, Chris, as well. Sort of went to a slightly hot low there. Yeah, right. Broke up. It hasn't broken that B wave yet, I think. Maybe it's gone 1.5, maybe 1.95. So it's gone 0.5% above here. So I definitely want to keep an eye on here. That was interesting. CAI, BCP, little B wave break here, a little bit of volume. It's a little small, but this has sort of definitely had a bit of a pop here. Some okay volume. Little ABC tighten up in here, held the 50 really, and then we've broken above this little B wave here. So we close above here. I think we closed above there yesterday. It's probably not a bad sign there for that sort of stock there. Probably a little small for me, but not a bad little technical setup there. LV1. Got one, I looked at this and thought, okay, this is really strong stock here, and then pretty tight in, but obviously it has come up a little bit here, but they often do this little, throwback, and then what I like is in here, we're seeing a bit of volume come in here, and now we're sort of starting to build again. So this is definitely one to keep an eye on there. We want to see a little congestion there, but that doesn't look too bad to me. That's mainly it there. I think I had a couple of the stocks that I sort of saw that had some momentum there. OPT sort of coming off the lows, not too bad. I think NXL, again, sort of tightening up there, holding that 20-day moving average as well. So that's not too bad. The IMU, look at that. The CHN, I think we might have had this in there last week, but a bit too early there. The key to these stocks here is when they're sort of coming off big lows like this, you really want to see that 0, 1, 2, 3 pattern, Chris. We want to see 3 or 4 high lows sort of build there before you sort of touch them there. Like the sort of IFL there is sort of like, I think we've had the low, second high low, so there's the first, second, third high low, then you start to build here, get another high low again. So that's the sort of, when they're coming off very, very low, we want to see a series of high lows building there. I think New Farm did sort of something similar. Had the low, first high low, second high low, pull back in here. So whether this, this might be your third high low in here, your first day up here. So you just want to start to see a few sequences of high lows before you, and it is nice there if you start to see, like this one here is sort of bounced off the 20 as well. So it gives you, the beauty of those sort of 0, 1, 2, 3 pattern is it gives you a pretty tight stop. And if you're looking at the moving average as well, you can kind of think, okay, we'll sort of stay within the 20. We don't want to see it really close by the 20. That'll be, I want to exit as well. So any good trading strategy, however it is, you sort of want to be keeping your risk nice and tight, and your reward nice and large, and just keeping it sort of tight there. The only other one there I thought was interesting was this INA, this as well. This is a big BCP here on the weekly. The whole thing's sort of tightening up here. I think I had this in the weekly chart there, but well, that's just sort of, the whole thing sort of, it's not bad volume here the last few weeks. Just starting to get a, I think the first low here, like a 1, 2, 3, so maybe a 0, 1, 2, 3 sort of building in here. Does need to sort of break out top there, but definitely want to keep an eye on here as well. So that's me for today. Probably going to be me for the year, I'd say. But yeah, been a pretty, been a fascinating year, really. Probably been the toughest trading quarter or sort of half year that I've sort of had in the last few years. But with those,
while you're talking, why don't you put the XJO on so we get a bit of context for how it's moved for the year? Yeah, right. Yeah.
Yeah, it's pretty erratic. So, yeah, definitely not a trend. Or apart from this last move here, not too much sort of trending throughout all this whole period here, I guess. Um, but yeah, pretty choppy into obviously October, pretty weak there, so pretty tough to make money in there. So yeah,
I do remember, I think it was early November in your Tuesday videos and your reports, we were looking at it, and you were saying early November, look, it's possible that the next 6 to 8 weeks could be the best trading weeks of the year, and it could change the outcome of the year in the next 6 to 8 weeks. Now,
yeah.
I think you might have been a couple of weeks early, but you were saying we could run hard to the end of the year. Here we are, so hats off to you. You did pick that really well. And the target.
It's funny you say that sort of last 7 weeks and stuff there, because I've sort of been kind of I've done a lot of reviewing this year. So I've reviewed more trades in the last few months than I've ever done, and I really tightened my process. I've introduced a few huge steps, and I've definitely added a bit more professionality to my approach and the process, and really, really, like I thought I had a pretty good process in place the last couple of years, but when I look back now, I think, wow, what I've got in place now is so much better, so much stronger, so much more robust, so much more disciplined than I had in place sort of 2 years ago. So I'm really happy with what I've actually built. And it's funny because I was literally looking at the last 7 weeks. It's probably been a disappointing year so far, even though we're only halfway there in terms of overall results. But I looked at the last 7 8 weeks and thought, okay, I'm actually look at sort of where I've come from the last 7 8 weeks. I've sort of I'm up about 1.5% each week for the last 7 weeks on my accounts. That's not bad. So that sort of gave me a little bit of heart. From terms of the process, getting it right. But then you say, "Oh, we'll be going up for 7 weeks." Oh, maybe that's the reason. It's not my professionality or the process and tightening up, but yeah. But still, I definitely feel like I'm sort of building my process nice and tighter, and I've learned a lot more about mine. I've definitely sort of brought, just a bit more professionality to what I'm doing here. So I'm pretty optimistic about. I'm on the right path anyway. So that's the main thing. As a trader there, we're just got to keep sort of improving there and trying to get better there, and I guess along that lines of sort of, in terms of sort of, in terms of not, you can't step in the same river twice, can't step into the same market twice. I've just got to control, as a trader there, you've just got to control my process. So if I do everything in terms of my process, and that's probably one thing I'm sort of trying to get my head around here in the last few months, is that is to not judge myself by the P&L, by the performance, by the dollars and cents there. Is to judge myself, have I followed my process? Have I scaled in successfully? Have I sold some into heat? Have I come back? Have I watched the strongest stocks come back into them? Or stayed with the strongest ones? So just focusing on that. So I've probably been taking less trades in the last 7 or 8 weeks. Just get a bit more size in the ones I'm in, and trying to trade those a little bit more as well. So, so that's what we take as traders there. So we just got to keep improving and evolving, and hopefully it stands us instead for a great 2024.
That's a really good summary of the year and insights that you share, the reviews that you've done with your own trading. So that point, I think people say, I think that is it for the year. So with that sort of reflection, probably a good time to reflect when we have downtime and less trading. Look back over the trades if you've got the spare time. And if not, we'll have a break and enjoy it. And we'll say thank you very much for all the reports and insights over the last year, Gary Glover from Novus Capital.
Thanks, Chris.
There's a whole lot of playlists on the right-hand side. Gary's talked about trading strategies, insights, trade reviews, and etc. on the right. And then his Tuesday reports also on the right. On the left, his X or his Twitter handle if you want to follow Gary there.